Hello everyone and welcome to Momentum channel. Today we are going to go over my entire portfolio with Wealthsimple Trade. It's one of the brokerage accounts where I have my part of my investment with, and here I have 3 different accounts. So what I'm going to do, I'm going to reveal my entire portfolio, go through them one by one, talk about the overall performance of this portfolio and where I see this portfolio in the next several months and in the years to come, and where I wanted this portfolio to be at in terms of the purchases and in terms of my investment plans when it comes to buys or purchases for this account. I hope you find this video beneficial and you gain something of value from it. Do let me know if you have any of these shares in your portfolio. But without any further ado, let's get into this video. Right, so as you can see, one of the accounts in my portfolio is my personal account, which is showing a return of 1.38% for 1 day, a return of 4.5% for 1 week, a 1 month return of 8.80%, a 3 month return of 11.66%, a 1 year return of 29.38%, and an all-time return of just slightly below 31%. Keep in mind, if you can see here, this account was opened in February of 2019, so it's been quite a while, about less than 1.5, just about, I would say, over 1.5 years, but not too bad at all. So let's go over the entire portfolio. As you can see, in the total value and the overall return, we have 3 shares of Apple, we have 29 shares of Air Canada, 19 shares of REIT for Artis Real Estate. Let me go over the Air Canada one just for a quick bit. You can see 35+% return for our 29 shares. We have a number of other ones, as I mentioned. We have shares of Bristol Myers, Bank of Nova Scotia. We have 2 shares of Salesforce here, CRM, ticker symbol CRM. You could see the purchase price for this one was $195.71, and we are sitting at close to 32% return for that. Dye & Durham is another one. It's a Canadian purchase that I had. I have 7 shares of them. Recently I bought them, and this is the company that they produce software for law firms as well as government and financial services here in Canada. It's a fairly recent company added to the stock market. In fact, it just was founded most recently, and as a result, I've added to my position for that company and doing quite good, I would say, in terms of returns for that one. I do have a number of different shares, including banks. I have 21 shares of Laurentian Bank. I was doing a lot worse on that one, but luckily the stock is returning now. It's recovering from its lows, and now right now we are sitting at close to -4%. We have numerous shares, 19 shares of Pfizer. You could see here our return overall was about 13.61%. We have 4 shares of Qualcomm as well. So for our Qualcomm shares, as you could see here, the return has been quite impressive, close to 42%. And we have a number of other shares here. You could see Royalty Pharma. We have closer to 26 shares here, and we're just showing roughly about 9% negative return. Well, definitely adding to my shares with Royalty Pharma gradually. We have 1 share of Sirius XM Holding, and this was purchase price was $5.71, and it's showing almost 15% return. 9 shares of Virgin Galactic is showing 30% return. We have 6 shares of actually TELUS Corporation, which is a communication company here in Canada. So that was also doing decent. We have a number of shares in VMD. You could see the return for that one. 6 shares with a return of close to 4.5%. A number of other ones. We have actually 7 shares of Verizon here, as you could see, and they're doing decent with 7.5% return. 10 shares of Well Health, and for this one we are showing close to 4.5% return negative. Windham Resorts, 3 shares of it, we're doing very well, 73% plus return. We also own a couple of index funds here, such as 3 shares of XIT, 7 shares of XRE, and of course we have 9 shares of ZWC here, which is showing a positive return. Now moving on, and let's take a look at our other accounts. How about we go over our tax-free savings account here? This is a tax registered account. As a result, there is some advantages to that. 1 day return of 1.74%, 1 week return of 3% plus, 3 months return of 18% return and 1 year return of 43.5%. An all-time return, you can see as well, closer to 47%. And this portfolio was also opened closer to February of 2019. So let's take a look at our overall shares. 1 share of Apple, 4 shares of AppBee, 26 shares of Carnival Cruise Lines, which is showing a decent return of 21+%. This is one of the stocks that is doing a bit poorer. We own several shares of them. The stock has done very poorly over the past several months, but we're trying to add to it on the dip, and you saw that today they did quite well. Chemtrade, the stock. We have 1 share of Facebook here with 29% plus return, 3 shares of Manulife, 7 shares of Norwegian Cruise Lines, a number of real estate and REIT stocks. We have 1 share of Store Capital, which is doing quite well. We have shares of TNT that you can see here, and we're doing quite well with close to 25% return on that one. We have again here a number of index funds. Here, for example, VCN, which was doing positive for us, close to 22% return overall. We have also 1 share of VRE, and this is doing also well for us here. Okay, let's move on and take a look at our RRSP, or Registered Retired Savings Plan here. Overall, 1 month return of 10+%, 1 day return of barely under 1%, 1 week return of 2.9%, 1 year return of 80%, and also all-time return of 80%. Our Registered Retired Savings Plan was not opened that far ago. In fact, we almost opened it at a perfect time. They opened it at closer to market declines back in March. You can see what shares we have here. We don't have too many different shares here, only a number of them. We can see here we have 1 share of Skyworks Solutions that we didn't have in any other one of our accounts here, so that's quite unique about that. The strategy that we are taking here when it comes to investing in these portfolios so far has been mostly trying to not add any necessarily new stocks to this portfolio, but rather build the position within this existing portfolio that we have here. As you can see, we have a nice mixture of different stocks and different industries and sectors. We have real estate investment trust, we have banking sector, we have consumer discretionary, we have hospitality, we have technology, we have a number of index funds, and you name it. We have quite a diversified portfolio, I would say. Overall, I think that these accounts that we talked about, overall, they are well diversified. That said, my personal account, the one that we saw first, had closer to, I think, 36 different holdings in it. That just makes it more difficult for me to really be able to do proper research on these companies. And now I'm not too worried about index funds, but for the companies, usually you want to be able to have enough time to study the companies and be able to follow their progress over time. Are they still a proper investment option for you over the long term, or is it time for you maybe to sell them and just cash out the profits, hopefully, if that's the case for you. So in that sense, I'm trying to kind of manage the portfolio size in a sense that maybe I cut some of those good performing stocks that I don't foresee myself to continue to invest in anymore, and instead use that money to add more to my existing position with other stocks within that portfolio. In an ideal scenario, an ideal world, I want to maybe limit my maximum number of stocks within this entire portfolio to perhaps maximum 20 different stocks. I think that's a much more manageable number of stocks and index funds. Now, since I have a couple of index funds, I don't mind perhaps 20 stocks and maybe 5 index funds. I think that's fine with index funds. Personally, I don't think I do need to do a lot of research on them as much, for the most part, because many of them are just following the broad stock market or just focusing on one sector, and overall it's easier. It's not one single company where you have to study one by one. So that's my approach when it comes to this portfolio. In terms of where I do see this portfolio, going in the next several years, and do I anticipate to grow it further, I definitely want to add more funds to it. And in fact, I've been adding to this portfolio over time. I do have a passive investing portfolio as well with Wealthsimple. That's for Wealthsimple Invest. But with that one, obviously, risk and reward. Although that portfolio is aggressive in terms of risk tolerance, nonetheless, the return for that has been hovering around 5.5% to 6% per year. Whereas you saw almost within the span of a past 1.5 year here, we are seeing a much larger return. In fact, the average return for the entire portfolio, I did the math just before this video, was hovering around 36 to 37% as a whole for my entire portfolio, this active trading here. So it's quite a decent, I would say, return. I'm quite pleased with that. In that sense, I wouldn't mind, continuing to add more funds here, while at the same time continuing to add also some funds to my passive investing portfolio. I think that's just a wiser decision. You don't want to put all your eggs in one basket. You want to kind of diversify. You want to put some funds into index funds that you don't have to worry too much about, almost like a passive investing through Wealthsimple Invest, and then have some of the mad money kind of investments where you get to do your research and invest in quality companies that you do believe in. So that's what we've been trying to do with Wealthsimple Invest. Do you own any of the shares that we talked about here in our portfolio today? Do you have any of them in your own stock investment portfolio? I would love to hear from you on that one. Be sure to leave me a comment down below in the comment section and let me know which one of those stocks do you have, or perhaps let me know what is the best performing stock in your own portfolio. Love to hear from you. Before I end this video, I want to make sure I mention that, if you are not invested in stock market and you're looking to get started, especially if you're here in Canada, US, or perhaps in the UK, make sure to take advantage of the referral links that I will put in the description of the video. You can join Wealthsimple Invest, which is an easy way to get started investing passively at pretty much no charge. Your first $10,000 would be managed for free for you. There's a referral link that you can take advantage of that. There's another option if you are more familiar with the stock and you want to really pick your own stock. Then Wealthsimple Trade, the tools that I just showed you in this video, would be an ideal one. If you use the referral link and you can insert it in the app itself as soon as you registered afterwards, what is going to happen is that you're going to earn $10, and I would also earn $10 for free, which we can both use to buy more shares of and really build more wealth. With that said, I hope you found this video beneficial, guys. Thank you so much for watching this video. If you did find it valuable to you and you felt that it kind of inspired you to get started with investing, or get excited about the stock market and what it can provide to you, please give it a thumbs up. It does mean a lot to me and really helps the channel to grow a lot faster, so we really appreciate that. And if you haven't joined our channel before, please be sure to subscribe to Momentum channel. Here on Momentum, we post weekly various videos about finances, stock market investing, and investing in general, and ways to get and achieve financial freedom. So with that said, thank you so much for watching, and I hope you have a great day.